Hello guys, welcome back. Today we are going to discuss the last video of accounts receivables. In the last two videos we have discussed what is accounts receivables, what are their allowance. Today we are going to discuss the factoring of accounts receivables. This is me RABEEH OVUNGAL. Welcome back to EduCafia. Yes, today we are going to discuss the last point of this accounts receivable, that is understanding what is factoring of receivables with or without a recourse. In the last two videos we were discussing how to value accounts receivables and how to calculate the allowance of the credit loss, right? So basically, what is factoring or factoring of receivables? It is nothing but in accounts receivables, there may be 1 crore rupees. We know this 1 crore rupees is from 100 customers. And now I'm having an urgency for doing further business. I'm having an emergency for this 1 crore rupees. I'm having emergency. What I will do? I will take the phones and I will call 100 customers and I will ask for the money. Please give the money. Please give the money. In the invoice, they have put some credit period. Some people may already gone above credit period, but some people will be inside the credit period. So I can't pressure them for that money. But I am having the urgency. What I will do? I will go to bank who having this facility factoring, and I will go to the bank and I will say, this much receivables is there in my receivable accounts, 1 crore. I will sell this to you, give me 1 crore rupees. These facilities are there in the bank. Companies will go to the bank who are having this facility factoring and they will sell these receivables to the bank. So bank will calculate value. They are not simply sitting there. They will calculate how much bad debt will come, how much realizable value, how much value they will get it from this. And they calculated and they understood, okay, from this 95 lakhs we will get. 95 lakhs we will get it from the market. And some fees also will be there. So just I am considering 5 lakhs fees. And after 90 lakhs, for 90 lakhs rupees, I will sell my accounts receivable which value 1 crore to the bank. And I will get this 90 lakhs in the spot. Now that 1 crore receivables is bank's receivables. Now bank will follow up with the customers and they will get the money. Okay, what is their profit? This 10 lakhs minus is difference is there, right? That is their profit. What is my profit? I got 90 lakhs in the spot. Now I can do my business. If I am waiting for this money for further expansion, means I can go for the expansion. So this is called factoring. There are two types of factoring. This is without a recourse and with recourse. Factoring, you understood what is factoring, right? So this is factoring without recourse and with recourse. What is the meaning of recourse? Recourse is nothing but right to go back and recover the money. Recourse means right to go back and recover the money. For example, bad debt we are calculating, we are estimating. Bank estimated 5 lakhs. Because of estimation 5 lakhs, bank only gave me 90 lakhs. Another 5 lakhs is their fees, okay. This 5 lakhs, they are estimated. Bad debt chances is there. So I am holding your 5 lakhs here. If it is not bad debt means, okay, I will give it back. They will give it back. Definitely they will give. But if it is bad debt means it's gone. Is it 100% sure that only bad debt will be 5 lakhs? No, it's just an estimation only. If it is bad debting, if it is not collecting, they are not getting money of 10 lakhs means what will happen? Already they are holding my 5 lakhs. Another 5 lakhs, what will happen? The bank will come to me and they will ask me that 5 lakhs. If it is recourse, that is called right to go back, right to come to me and recover the money. They will come and ask me and I have to give this 5 lakhs extra. And if it is factoring without a recourse means they will not have the right to come me and ask. It is their headache only. So if it is with recourse means it is my responsibility to give the money. So their fees also will be small when comparing to without a recourse. Without a recourse means it is their responsibility, bank responsibility to collect the money. So the fees will increase. Because of it's my responsibility, if it is getting bad up to I have to give the money to the bank means the fees also will be less. Got it? So this is called factoring without a recourse and with a recourse. The seller means I am the seller. My company is I am selling, right? The seller has no obligation to compensate the factor. Who is the factor? Factor means that bank. Bank is the factor. Okay. If it is with recourse means it is my obligation to give the money. Okay. This is called without a recourse and with recourse. We will do a question. After doing this question, you will understand what is the difference between with or without. Okay. So in my accounts receivables, there is a 5 lakhs rupees. I am selling these accounts receivables to a bank. So this is with recourse. Okay. Factoring with recourse. So it is my obligation. I have to give him if it is getting bad up. So the finance charge 3%. So whatever is there in the accounts receivables, the 3% of that will be their charge, their fees. And factor means a bank understood 5% possible for a bad debt. 5% of this 5 lakhs possibility is there for bad debt. So what is that 5% of 5 lakhs? I think it is 25,000. So 25,000 they will hold back. They will not give me. The bank will not give me that money. They will hold it there. And after all the collection, if they got all the collection, there is nothing in the bad debt means that day they will give me that 5 lakhs. Sorry, that 25,000. 25,000 they will give me. If in that 25,000 only they got 10,000, 50,000 is not got means that 10,000 I will get. 50,000 they will hold it there. You understood, right? Because of it is factoring with the recourse. Again, I have the obligation. Already 25,000, 5% of this 5 lakh, 25,000 they are holding back. If bad debt is going to above 25,000 means what will happen? I have to give, right? So still I am having an obligation, estimated obligation. I am estimating. Okay, again there is a $6,000 extra 6,000. I am estimating extra 6,000 chance is there for bad debt. Already 5% is calculated. Above this extra 6,000 I understood obligation is there. So that is called estimated recourse obligation extra 6,000. This is in my side. In my side I understood, okay, 6,000 extra is there. So I have to keep a 6,000 ready here. Tomorrow if happens I have to give him like that. Okay, I'm not giving today. If tomorrow if it is happening I have to give. So I am keeping a 6,000 in my books as an obligation. In my books only. Okay. So the finance charge, total finance charge is 3%. That's finance charge, right? That is 50,000. And my obligation 6,000. So my total loss on sale 21,000. What is my total loss? Because I am selling to that person, because of it is with recourse, In this 5 lakhs, 3% charge, that is 50,000, and I am having an obligation 6,000. What is my total loss? 21,000. Because of I am selling this. And they are holding back 5%, 25,000 also they will hold it back. So how much cash I will get it? Totally in my hand I will get it from this 5 lakhs, 25,000 they are not giving back. So they are holding. And the 3% finance charge, that permanently I am not getting. That 15,000 also I am not getting. So totally 4,60,000 only I will get in my hand. Correct? Huh? So what will be the journal entry? In the accounts receivables, 5 lakhs, 4,60,000 cash I received. And due from factor. From factor, due is there, pending is there, 25,000. And loss on sale of receivable. Loss on sale of receivable, 50,000 in this 5 lakhs. So this sum, I am not saying this sum is 5 lakhs. But at the same time, I am having a recourse liability. In my liability side, I will be adding 6,000. And this is my loss on recourse liability, 6,000. How? In my income statement, I have to show as an expense, loss on recourse liability, and it will come to the balance sheet in the liability side, 6,000. Okay. And after that period, some period will be there. After all the collection, bank got this 5 lakhs total amount. Nothing bad up is there. This 25,000 pending is there, right? That 25,000 they will give me back. That time from due from factor I can convert it to cash. And nothing pending is there, right? So that time this 6,000 I am keeping in the recourse liability, right? They can remove from there. I can show to gain. This is a gain for me. Got it? But any bad debt happened in this 25,000, they are holding back, right? In that 10,000 bad debt, balance everything they have collected. Except the 10,000, everything bank collected means in this 15,000 pending is there, right? In this 15,000, from this 25,000, 15,000 will go to cash. Balance 10,000 will go to loss account. I lost. And whatever is there in the 6,000 in recourse liability, it will go to gain. Because no need to give. Because it is closed. You got it? Next, factoring without a recourse. If it is without a recourse means finance charge will be there. And whatever bad debt they will calculate, that also they will hold it back. That's all. That's all. Whatever they calculated, they understood 5% bad debt chance is there. That amount they will keep it there. If anything above this 5%, I am not responsible. That is what without a recourse. They can't come to me and ask. So, what is the difference between here and there? Their estimated recourse obligation was there, $6,000. Here, that is not there. Because for me, it's not an obligation for me. So, here my finance charge will be 5 lakhs, 3%, 50,000. That is the only permanent difference. Fees I am giving. And 25,000 is there. That is due from him. Due from him. If he is getting 5 lakhs full amount, that 25,000 he has to give me. If in that 10,000 only pending, balance 4 lakhs 90,000 he got means in this 25,000, after deducting this 10,000, you have to give me 50,000. You have to give me. For example, he is only getting 4 lakhs 50,000. 50,000 is bad debt. Only he having 25,000. My 25,000 only he having. That he will not give me. Balance 25,000 is there, right? That is their bank loss. It's not my concern. It's not my concern. That's why it is without recourse. That's why what will happen here, the finance charge is 3%, right? Probably here the finance charge will not be 3%. It may be 5%. This question I am only created, that's why same here also 3%, here also 3%. Here it will be 5%, 10%. They will increase the fees because of it is without recourse. So you understood, right? So here accounts receivables 5 lakhs. In that 4 lakhs 60,000 will be I got as cash, and 25,000 due from factor, and 50,000 loss on sale as his finance charge. So this is called factoring with recourse and without recourse. I hope you understood what is factoring and what is there in account receivables. So I will pin it these notes in the description box. You will get it from there. See you in the next video. Bye bye.